Welcome back. Now, as I mentioned before the break, Stats SA has announced that consumer inflation has slowed. That's to 4.5% year-on-year in December, and that's from 5.2% in November. Analysts had expected that inflation would range between 4.3 and 4.5. That's on the back of a substantial decline in fuel costs. In December, petrol and diesel prices fell by 184 cents or 1 rand 84 per litre and 1 rand 45 per litre for diesel, respectively.
December's inflation print was the lowest inflation rate in 7 months. Statistics South Africa says annual core inflation rate, which excludes the cost of food, non-alcoholic beverages, fuel and energy, stood at 4.4%, unchanged from December's data. Economist Laura Campbell says for the new year it is likely that inflation will deteriorate further as yet another fuel cut is expected.
This is good news for consumers. It means that interest rates are unlikely to rise in the first half of this year at least. In the Reserve Bank, following their meeting last week, they intimated their quarterly projection model suggested that there will only be another 0.25% hike in interest rates between now and the end of next year. So that is good news for consumers who are heavily indebted. For those who are relying on pensions, it means that they're not going to get as much as they would have if interest rates rose.
Standard Bank economists say underlying inflation pressures remain rather subdued, but there are risks to food and fuel prices. They expect the Reserve Bank to keep the repo rate steady through 2019. Diabo Seto, SABC News, Johannesburg.